Hey, good morning. Dr. Barton Jr. coming to you here with the Money Mornings Market Open. It is Tuesday, July the 7th, and I am here every Tuesday. Get to see CJ the rest of the mornings, but every Tuesday you'll find me right here giving CJ a break and bringing you my take on what's happening with the markets. And we've got lots to talk about today. So looks like I'm down in the corner. I wasn't even talking to you from Big Middle, DR. I can come up here and say hi just for a minute. So whoops. There we go. Looks like I had a hair malfunction while I was getting ready this morning. So we're glad to have you on. We got a lot to talk about with the markets. So with all of that said, and now that we've gotten our proper hellos up here, let me check in on the chat room saying people coming in from Long Island, Fort Myers. Glad to have all you folks on this morning. So good to be with you. So also from North Carolina. So and Serge is here. Awesome, Pat. Good to have you all on this morning. So what I'm going to do is drop down to the corner. So, and I'll drop down to the other corner. I'll drop down to this corner so I can get out of the way of the PowerPoint so we can see what we're going to talk about today. Let's take a look at that. So we're first going to talk about the state of the market, as always. So we're going to look at some chart patterns that are occurring on the S&P 500. So we're going to dig into that, and we are going to look at this interesting rectangle and talk about whether or not this is a breakout or a bear trap. A bull trap. We'll talk about that just a little bit. And again, how good have these support and resistance lines been? These levels have been just amazing, helping us guide our trading. And with yesterday's big update, it'll be interesting to see if this, in fact, is a turnaround Tuesday, that after the strong up moves of the past few days, if we're going to turn around the early market data, looks like that's going to be the case. We'll look at our narrative again on the big screen when we get there, talk about virus and the news out of China, the continuing news out of China, especially right now with South China. See things happening with what's going on in the Hong Kong transition, people pulling out of supporting things that are going on in Hong Kong. We'll talk about all that, all of those things versus the stimulus money and the fear of missing out still. The dominant narrative, the battle between those two concepts. So we'll take a look at COVID because it's one of the key things. It is one of the key things driving markets, and I believe there is one big news item coming up in the next couple of weeks that we're going to have to watch for. And until that, we're going to be getting pretty much a free rein to the upside in the markets. So we'll also talk just for a second about the boycott with Facebook. Then we'll look at a couple of our earnings charts. You can see we're going to talk about paychecks out this morning, Bed Bath & Beyond tomorrow, Walgreens on Thursday. So even though we're at the tail end of earnings season, still some significant earnings to talk about. And lastly, a breakout candidate for you to watch and consider. All right, with all of that said, let's jump out of here. Oh, and we'll do one other thing. Let me move over to the other side before I forget, so I'm out of the way of any hard right edge of the screen things. But we'll look and see. We'll do one more thing as time allows. At the end, we'll take some of your stocks, look at some of the potential, look at some reads, what I'm seeing on the charts and in the dark pool data to help you understand what's going on in the stocks that you're interested in. So with all that said, glad to have all the other new folks coming in. Angela from Texas, all the way from Israel, glad to have you, and also from Santa Fe. All right, everyone. So let's talk about what's going on in this market. I talked about the breakout of the rectangle. Let's look at the rectangle that we've been in the markets and see what we did. If we draw a line probably from about right there over and up and to the top of that bar on Thursday's trading, you can see that we had a rectangle that included 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, exactly 3 weeks. 3 weeks of trading, 15 trading days, actually a little bit more with the holiday thrown in there. So yesterday, you can see that the market gave a try to break out. Oh, that's too big of a dot. Let's try that again. The market gave a breakout and closed above, outside the rectangle. Now, with turnaround Tuesday happening, we're down, the markets are down about 0.5% this morning, actually right back into the rectangle. So if we only have one day to peak out and pop above that and then close back inside the rectangle, we will have to consider that the breakout has not been confirmed and that we have more sideways action to cover. Now, there is, as you can see easily on the chart with this group right over here, there is resistance right overhead, and let's look at what makes up that resistance. As a matter of fact, I was on Charles Payne's show yesterday afternoon, and that was the first thing he asked me about. He said, tell me about your resistance numbers. I need to know what's happening here. What could slow down this breakout? And so I'll give you the same numbers that I gave him, and here is the number that we need to look at. If we draw a horizontal line right across here, you will see that we came right to this level. Now, this high right here, this top was, that number is 32.33. This high right here, that's what that number is. I don't know why we've got that light colored pen. We'll go with the darker one. That's this number right here. But I think our support and resistance is probably that. Again, I think maybe was a little bull trap, that little breakout of that level back in early June. And what we see here, if we look back at this level where we tried and came up and held resistance, finally made a clean breakthrough, tried to get through to the downside of the resistance, became support, and held for probably about 10 days in a row. We took off a little bit, tested it again, took off, made those new all-time highs, then came back, tested for 1 day in the beginning of the big coronavirus drop. Then when we broke it, we broke through cleanly again, and then did our coronavirus dive here. Now, we came up again and tested this, and we talked about this long before it happened in our afternoon outlook. For those of you who are watching this line then, we had this exact line drawn on the chart, and we came up and tested it 1 day. We got a bull trap break above it for 1 day, then the third, fourth days, and now we've come back. So here, our choice for the market, will we go back in and meander around more sideways action inside that rectangle that we're trying to break out of? Or can the market turn around intraday Tuesday? Instead of having the turnaround from yesterday's up move and have a down day today, can the market regain its footing and stay above that line on the rectangle? That'll be a key one to watch today. What happens with the market? Is it just a profit-taking day after yesterday's big up move or not? So that's what we're going to continue to watch. And obviously what we're looking at in our narrative in the market right now, what we're looking at is the forces pushing us down are COVID-19, of course, and the health and economic ramifications there. Plus, we have to add China. What's going on with China's new belligerents. And if you think that's something that's not real, let's look at the list. We've got the South China Sea. What's going on there? We have the India border skirmishes. What's going on there? We've got Hong Kong, and we've got all of the trade issues going on all at one time. Those are all the things where China is going, look, the world's in shambles. The coronavirus has got everybody putting all their resources and time, thinking power on other stuff. It's a time for us to flex our muscles, and that's what's going on. China is being belligerent on all of these fronts, and we got to keep, the markets will react to that. So far have reacted fairly mildly, but they'll continue to react to that laundry list of what's happening and what's coming out of China. So with that said, that is the narrative that we had that battle down, the CV in China pushing down, and then what's pushing us up Stimulus dollars, stimulus dollars, stimulus dollars, lots of them, both fiscal and monetary, as well as optimism and the fear of missing out. This has been a theme that we've had for the longest time with what has appeared to has definitely been a V-shaped market recovery. Are we going to get a V-shaped economic recovery as well? The second quarter numbers will be the big tell there. They'll start coming out now that we're into July. We're into the third quarter of the year. We'll start getting second quarter numbers in the coming weeks to see what kind of recovery we are in fact having. So far, it's looking pretty good. Yesterday, we got that key non-manufacturing ISM number that tells us what services, how the services world is going. And to look at that, I want to show you that on a 5-minute chart. Let's look at the same. We'll keep the INX on a 5-minute chart here. And let's look at what happened yesterday when that number came out. So when that number, because there's a new sub-narrative out there playing around, we're going to have to keep our eyes on as traders and investors. So at the 10 o'clock hour on this bar shows the end. 10 o'clock ended right there. So the market took off and went higher for 5 minutes, and then for a few minutes, just a couple of minutes, came back down, closed right where it started, and then sold off. So it popped on this ISM number. We were expecting around 50, around not contraction, not growth. That's the line in the sand for these ISM measurements, is if it's above 50, the economy is expanding. Below 50, the economy is contracting. People were expecting somewhere around 49 to 50 was the consensus, and what we got was 57.8. So vastly exceeded the number we were expecting to get for how fast the services sector is growing. And what the market response is very telling, that the market at first said, oh, good, and then, oh no, that is so big. Why did it drop? The market said that is such a big number that we are concerned as traders and investors that the Fed will stop spiking the punch bowl so liberally, that the Fed will not be as free and easy with qualitative easing money, and that is why the market pulled back, then recovered itself and ended up near the highs of the day at the close yesterday. So that's an interesting thing, that the good news, the really good news, the too good news, the news that was too good, got traders thinking that QE and all of the quantitative easing, all the monetary stimulus may slow down if the economy heats up too quickly. So that's a new narrative to keep our eyes on. First time it's really reared its head since way back in January. So with us looking at all of that, the next thing we wanted to talk about was taking a quick look at those COVID numbers. I'm going to check in over in our chat box, see what people are hitting. Yeah, we got some stocks. We'll look at some stocks here in a few minutes. And Larry, that was an interesting one. I see you talked about the island reversal back there, and so far that's exactly what we got. What Larry's talking about is that when we got this gap up to here, then we had these 4 trading days up. Then we got the gap from this close down to here. So we've got basically this set of 4 bars forms a little island, and that was a reversal. So what we're trying to do is fill this gap in here and invalidate that island reversal. But it was very real for 3 weeks. So it was a strong pattern, even if we keep going up from here. So good catch there. Good catch there, Larry. Let's talk about what's going on in the COVID world. And interestingly, of course, this big drop here was all kinds of different concerns. The drop that we had a week ago was on continuing COVID growth in case numbers. And let's talk real quickly about some numbers that we need to be looking at. And I'll pull up here. You can use about any site you'd like. The one we'll look at real quickly is the New York Times, only because they have a 7-day moving average. The Johns Hopkins uses a shorter moving average that I find just slightly less useful. I like a lot of the Johns Hopkins data, but all the data is fairly similar. It's just where you find it that meets your eye. But here's the problem. Cases in the U.S. going up extremely high, along with all the other problems and the huge problems that we're seeing in Brazil, in India, in Russia, that's starting to go down finally, in Bangladesh, Pakistan, in all kinds of other South American countries, Peru, Chile. So those numbers, those increasing numbers, concerning. But why the market hasn't been responding, is the answer to that is contained in the chart below. The number of new deaths reported. So if there is any silver lining in what's been happening in the coronavirus world, it's not that cases have gone up. And let's be clear, cases are going up not because we're doing more testing, because we are doing slightly more testing than we were 14 days ago, but not a ton more testing than we were 14 days ago. If you look at those numbers, yes, we're doing a little bit more, but not this much more. The number of new positives has gone up, although the last couple of days it's gone down in Texas. The number of positives versus the number of tests given has been finally going down just a touch there. But that's not the answer. The answer is not cases are going up because we're doing more testing. We're getting more new positives over the last 14 days, more hospitalizations as well. But what hasn't been going up has been the number of fatalities. So the deadliness of the virus has seemed to not picked up along with the cases. But we've got to remember that there is an offset for how quickly the cases grow. You can see when we had our peak back here and when we had our peak in deaths was later. So what happens is that we get confirmed, we get cases, we get hospitalizations, and unfortunately the fatalities don't come side by side. We have to wait to see if those new cases are going to result in a spike in fatalities. I think we've got about another week and a half to 2 weeks to find that out. And as we move out to see if this number goes up or can continue to moderate and not even go up very strongly, to if it ticks up, not to tick up strongly, that would give the market a lot of encouragement. And I think the reason that the market has not been responding so much to this growth is because of the seemingly lack of severity so far. I believe we're going to get a free ride on that low severity breakout of cases, the low severity spike or surge in cases. I believe we're going to get a free ride on that for the next couple of weeks, and then we've got to watch this curve, the daily death reports, very closely to see how that's going to respond, and that's going to drive the markets quite a bit. Okay, so there is our COVID update. Let's talk real quickly about, and let me we'll pull this off away from our screen. Let's look at what's happening with just a real quick word on Facebook. That's been in the news a lot. That was one of the things that's on our agenda for today. So we'll look Facebook, what's been happening with Facebook. So with the July boycott, with 100 companies boycotting Facebook in July, why we would expect them to be getting hammered. So they're going to lose revenue. So let's take a look at that. If we take a look at that on the chart, what's Facebook doing? Well, Facebook did on the initial thought with some of the big players saying that they were going to boycott Facebook in July. They had a drop, then they had the big drop when a couple more of the big companies said that they were going to be pulling advertising for the month of July. And then a funny thing happened. Traders and investors piled back into Facebook, bringing it almost back up to near the all-time highs. Why is that? Well, there's a fairly simple fact. A study came out today that of those advertisers who were cutting advertising, were boycotting in July, they amount to only 6% of Facebook's revenue, only 6%. That explains a lot about what's happening here. Whatever you think about that issue, about how Facebook is handling it, it's actually a pretty big day. Zuckerberg and all the top people at at Facebook are meeting with that no hate for profit. I think that's very close. No hate speech for profit movement, and that'll be interesting to see what comes out of that today. If Facebook is able to give them some encouragement about what they're doing moving ahead in that. We'll watch the stock pretty closely with that going on. But so far this morning, with the market down 0.5%, Facebook not down very much, about the same as the market so far. So let's do a few things. Let's talk about a couple of earnings. Let's talk about a breakout candidate possibility. And then let's dig into some of the stocks that you want to talk about and want to look at on from a technical analysis perspective and from what's happening in the dark pools. So with that, let's look at what happened this morning. We had one fairly interesting report came out this morning. Paychex, they actually beat by just a teeny tiny bit on their earnings report. But if you look, they are trading right now at down a little bit. If we look at what's happened in pre-market, their earnings were kind of a Goldilocks, sort of just right. Not too much to upset anybody, not too big a drop on some of the negative things, not too big of a lift on the earnings and some of the bottom line things. And if we look at what happened in Paychex in the overnight, you can see they bounced way up, then they bounced way down. So here's where they closed yesterday, Friday. They closed right around 4 o'clock on Friday. They closed right around here, and they announced they went way up. Then they went way down. Now they're back. They're right around, close to break even. So not much happening. We thought there was some chance that what Paychex had, because what their data was going to tell us, they process a lot of data for small and medium-sized businesses. They do payroll and they do human resources support for those small businesses and medium-sized businesses that don't want to have a whole in-house capability for those areas. So we thought Paychex might tell us a little bit something about the employment picture, whether it's what they're seeing is a bit different than what the government numbers are showing. And bottom line is it's about in line. So there wasn't much difference, wasn't much new expectation, new surprise coming out of what they told us. So the next one that we want to look at, let's go back to the big chart. Tomorrow reporting will be the interesting big box store, Bed Bath & Beyond. Now, before you get excited about looking at this chart, you can see Bed Bath & Beyond went from about 18 down to less than 4. They lost more than 80% of their value through the coronavirus problems. Now they have rebounded almost 2.5x. So they've had a really good rebound. But the whole picture with Bed Bath & Beyond is their rebound, they have been doing some restructuring, and they've been, if we look even further back on this chart, we'll see it. They've been doing some restructuring for a long time. They've been coming from much loftier heights before to get down to this level already. So they have been in bigger trouble. And if we even go back further than this, you can see that when we got down here, we're at 10, back to where they were from a few years ago with their peaks in 2015. They have been a big box store that has been just under severe pressure from online purchases. They've been trying to have a turnaround story, and so far not so good, although this little bounce off the bottom gives a little bit of hope. I'm not expecting much out of their earnings tomorrow in terms of saying great things have been happening in Bed Bath & Beyond, although hearing what their restructuring story going forward for some people who want to do some value buying is going to be an important thing to hear there. The other one that we'll see, actually, let's keep them on a long time frame before we break it down a little bit more. It's Walgreens Boots. Now, Walgreens is one huge enigma. If we look at the big three, Walgreens, CVS, and Rite Aid, the big three pharmacy companies here in the U.S., Walgreens probably has the best real estate portfolio of all of them in terms of getting that corner drugstore, those corner lots. The study was done a couple of years ago that showed that they really had a competitive advantage in location that they're not being able to capitalize on. You can see from back when they peaked out again in 2015, like a lot of retailers did, back above the 90s, now down trading more than half of that down. That is not a success story for Walgreens for sure. And let's pop them to a daily and take a look at what happened just I believe it was last week. Rite Aid reported 2 weeks ago and had the big gap up, a gap and go. So Rite Aid had some really good news, which the problem with that is that Walgreens is now going to have high expectations. Typed in the wrong symbol. Hit the G instead of the B instead of the G. There we go. Walgreens is going to have exceedingly high expectations for their earnings. I'm expecting this to be a not good earnings report and for them to get popped to the downside on Thursday when they report before the market opens. We'll see how that plays out. And that sort of fills out our list of earnings to watch this week, those three to watch. Now let's talk about a breakout candidate, a strong stock that's been doing well, that I believe the pent-up demand story is going to continue to help out, and I'm looking for them to break out of a really tight technical consolidation. Let's take a look at Home Depot. If we see what's been happening with Home Depot recently, here's the daily chart of Home Depot, and we can see if we blow it up big enough, we're going to be able to draw another rectangle around this puppy and see that, kind of like the market, it's been in that sort of sideways consolidation area. Let's go down to that open there, draw that. Now, unlike the market, it didn't break out yesterday, but I believe a break above this level, is going to be a good thing with their recent highs right above us here. I believe that Home Depot's doing a lot of things well, and that as people continue to upgrade homes, that migration from center city to suburbs that is being driven by coronavirus concerns, it's going to happen in the coming months and quarters, I believe is going to strongly benefit the home building retailers like Home Depot and Lowe's, and I like Home Depot's positioning a little better than Lowe's. So there is my trading idea. To buy this thing down here is fine. Actually, it's down 30 cents more, 0.3% today, 75 cents more. To buy it down here or even on any further pullbacks in anticipation of a breakout. Here's an idea you could do, is to buy 50% at 50% of your position down here, and then add the other 50% as it breaks out, so that you could make sure you don't miss out on the opportunity and still play it by buying some now and then buying some on the confirmation of the breakout. But this is one that I really like going forward. I think it's into the second half of the year is a stock to keep an eye on for more upside. So there we go with our trade to consider, our breakout candidate in Home Depot. And I will switch back over to the chat box now so that I can look and see what kinds of things people would like to take a look at in terms of technical data and our dark pool data. So with that said, let's bounce over here and see what we've got. All right, I see we have one for, I'll go back to a little bit, not going to go back too far. Some people put some stuff in early. So we've got some GMs there, but I'm pretty sure all those mean good morning, not to look at General Motors. So we'll look, we can look at we've looked at, somebody gave, if I could spell it right, gave Invax and, all of these companies, all of the virus, especially the very small vaccine companies like Novavax, they just got some government funding. They're actually up pre-market. Let's look at that. Let's look at them on a 5-minute bar. We'll see some pretty good fireworks here when we go to the 24-hour chart. You'll see that this morning from the lows where they were before, here's 7.7. So they got to the announcement of some funding for vaccines, and they're up at 115, up from 80. So that's a pretty good pop there, 30%, up 30% this morning. Again, with these kinds of trades, I think we see that's the buying the rumor. Now we're already seeing a little bit of the selling the news. That's the buying a rumor. There's the little bit of the selling the news there. So I won't even look at the dark pool data. These really small caps don't have a lot of institutional involvement just because of the nature of them. Let's go back to our daily chart, and we'll look at a couple of others. Sergio had, what price do you like to add Tesla for the long term? Yeah, been waiting for a pullback. You know, patience is required. I don't think you can jump into Tesla. Actually, I got asked this by Ashley Webster on Varney and Company on Thursday, just the day before the 4th of July weekend last week, and he asked me that same exact question when it was trading here. Was I a buyer here? Now let's talk about the Tesla story for just a minute. They're much more than a car manufacturer, and I'm not talking about their solar panel business. I'm talking about technology, that they are a technology leader, and they are changing the game from that perspective. And I think over the long term, that's going to be something that people are going to see playing out. I believe buying it at this kind of mania high is a much higher risk play. Every time we've gotten a mania high, you've gotten a chance to buy. Tesla on a pullback. We got this one and we got a pullback. Every time it's had a big move up, Tesla, if we looked back way long ago, you got a chance to buy it much lower. I would say you're going to get a chance to buy this 30% lower, Sergio, if you have the patience. I don't think you're going to miss the big breakout that continues to happen here. So, you know, I'd say getting back to test this consolidation area back here, you'll probably get a chance to jump in on Tesla there. Let's just take a quick look, since Serge, I know you're in Dark Edge trading room all the time. Let's take a quick look at what's happening to Tesla yesterday. This data will be obviously from yesterday, that we can look at some sweeps. Interesting that we got some negative sweeps, two of the top three, some negative sweeps, but mostly positive. I mean, if we looked at that overall, you'd have to say that that's fairly positive sweep data. I would have to say that dark pool sentiment is pretty flat. That's interesting on such a huge up day yesterday. Look at this. The bulls were only ahead of the bears by 1% when we look at the consolidated options and block data on dark pools from yesterday. So put call ratio still high, many more puts than calls on Tesla, so people expecting that pullback. And once again, when you get this kind of really climactic move on a stock, this is just a parabolic explosion up in in Tesla. And I think if you own it, if you bought it well, if you bought it back in here, oh, hallelujah. If you bought it back in here, amazing. If you bought it even in here and got it to ride it up here, that's great. But remember, you got to have your get out point. Don't give it all back. Don't give it all back. If you made a purchase around 1,000, you're in for 1,300 right now, right at 1,400. If you're in at 1,400 and you bought it at 1,000, you got a 40% gain in a little over a week or a little less than a week or a month, whatever it is. For Pete's sake, don't give that back. Have yourself an uncle point. Get out somewhere here, a 2-day trailing stop, anything. Just have a place to be able to take at least some of your profits off, and then you can always re-enter. You can always buy it back. Will Tesla go straight to the moon from here? I predict it will not. I predict that it will be a more jagged ride up. So we'll continue to watch that. Interestingly, I checked short interest on Tesla yesterday, and it's only about 10%. I think a lot of the shorts have gotten just chewed up and thrown out is the main reason. And of course, yesterday with Elon Musk sending out his shorts to David Einhorn and others, as an interesting publicity stunt, but it was much more than a publicity stunt. It was a tremendous poke from Elon. He lives for that. So let's see. Let's see what else we've got here. We've got Google. Let's talk about Google. I see Naveed is asking for Google. Let's see, bear or bull today. So in an intraday, I think right now, with what's going on in the Facebook and social media, when they make an announcement today, if it's a good announcement, it could help all the social media stocks. We could see Google, we could see Snap, we could see Twitter. All of them do well. But much like Facebook, Google is near the top of the page. It hasn't made new all-time highs like Facebook has, but it got hit with Facebook, because really there's Facebook and there's Google. That's the duopoly of online advertising. So they got hit when Facebook got hit. They've recovered with Facebook's recovery. So today, I believe, is going to be more headline driven than technical driven or dark pool driven or anything else driven. We're going to see what happens, what comes out of the meeting with Zuckerberg and the protest group, and see what happens. What if they play nice and everybody likes, and the protesters like what Zuckerberg and his team have to say, we might see a pop in these. So that might be a way to play it. I can't imagine that they'll come out breathing fire and brimstone out of that meeting. It's a possibility, but I think the probability is on something interesting coming out, good, interesting in terms of good for Facebook coming out there. Okay, we've had a bunch more coming through here. So we've got, Walter, I'm going to pick one of your two. You've got Workhorse and Cost. Let's go with the bigger one of those two. And I like what Costco is doing in the long term. They're really well run. I think they got this big run up back here. They got their big coronavirus run up. And then since then, it's been sort of, sell the news. They've had a recent run up here, breaking this trend line. If you look, we've got kind of a couple of them. You could draw one there that goes out that way, and then you could draw one here that goes down like that. So you got a couple. If I could connect those lines better, there we go. So breaking out here, I think Costco could be a breakout candidate. Let's take a quick look at what's happening in the dark pools for Costco. That might give us some information there. There we go. Let's look up, get rid of those drawings. We'll take a couple of more before our time runs out here. So Costco, let's look at what's happening in the options block, on the options blocks, the top trades in the dark pool data. Still waiting. Interesting. Yep, looks like we're having some pre-market pause there. There it comes. All right, just as soon as I left off. Interestingly, so the two biggest blocks on Costco yesterday were positive, not huge blocks, a million share equivalents for this one, another almost a million for this one. Then three others that were pretty big, so a little bit, so pretty balanced there. Let's look at what happened with the sentiment on Costco. Here, 23%, so a bit more with a broadly held stock like Costco. 23 to 20 is a pretty good gap for bullish to bearish. So supporting my modestly bullish thesis on Costco. Let's see here. That, KS, talking about SPX, I believe, yes, we broke out of the box yesterday, but I don't believe that it will be a clean break. I think we're going to trade back into it today. It wouldn't surprise me to see us come back out and reverse this morning. As a matter of fact, let's look and see what we're doing in SPY as we come into the morning. Let's put this on a 5-minute. And here's what we're doing. This will be some key areas already to watch. Let's look at this horizontal line right there. Obviously, is going to be sort of the breakout line where we're right at this morning to break back in and try to get back to yesterday's close. Now remember, yesterday's close is going to be up here. at 4 o'clock. So that bar right there is yesterday's close, right around 317. So we're down 1.5 points, about 0.5% there. For your credit. Oh, okay. You got a credit spread. You need it to stay under 315, Fred. So, Walter. So that's pretty good. Let's see how much. You've got a bit of room there, don't you? Let's see, not much. So yeah, fortunately that's a bit of a support area. We've got some numbers heading back across the chart for you. That's a little bit shows up. It's not support. Excuse me. It's a little bit of a. If I can kill that errantly drawn trend line, get our horizontal, you can see 315 has been an area that's gotten a little bit of response in the past. Here. Yeah, broke above it and down, and then this point is the good one, I think. So by the end of the week, if you only need it by the end of the week, that 311, so that's pretty good. Today, down 30 cents, down a third of a percent. So I think this week you're going to be, you might have to put some adjustments on that puppy if we get another day like today. But it looks like you're going to be okay. A couple of other ones. Let's look at. Yeah, INO is a frequent one that we get people asking about. Again, I hope last week that you took my advice when we talked about INO. I said every time these things go up the Eiffel Tower, when we go up the Eiffel Tower, you have to, like I was talking about with Tesla, you have to have your get out point. So, if you bought at 15 and you've ridden it up to 35 and all the way back down to 20, you've probably missed some opportunities to take some profits here. But I think we'll probably, like we saw before, we'll probably get some more peaks in INO. It'll happen. They're doing some good things, I believe, and I think we'll continue to see that kind of volatility with them. But always when you get those asymptotic, when you get those parabolic moves that just go like that, and we're riding up the parabola, be sure to have a get out point to take some of your profits off, because you know that those are not going to last for long. I wrote an article entitled "The Market, Nature Abhors a Vacuum, the Markets Abhor a Parabola." They do not, those parabolas just don't last. So I think that's going to be all we have time for. The market's open in a couple of minutes, folks. Let's go get ready for that. I'll look forward to seeing you next Tuesday right here on the morning update preparation at 8:45. CJ will be back with you tomorrow. So I hope you have a great day today. Hope the rest of your week is awesome. Stay safe out there. Help yourself, help someone else if you're able, and God bless you.